to be on the call with you. Thank you for joining me. Did you get a chance to watch my short little video?
I did. Yeah. Thank
That's
you for that
fantastic.
link.
Yeah, that saves a bit of time so we can concentrate on you. So why don't you tell me your journey into real estate and why real estate and what I can do to help you
Sure.
with it? Yeah.
Yeah, sure. So, I started getting into real estate kind of for a couple of reasons. Obviously, to get my starter home going and acquire, assets that way. In my late 20s, I'm a carpenter by trade.
Okay.
So I did the traditional route, just got tons of advice from the guys I worked with just on, how to save up and do things kind of conventionally. And I acquired property in Oakland, California. I was living in the Bay Area at the time,
Okay.
and just started off with some modest craftsmen, fixed it up, and it just I got into the market right before it skyrocketed.
Oh,
It
nice.
was so all the dust had settled from the 2008 crash, and I had waited to, for there's a lot of changes in neighborhoods and transfer of wealth, so I wanted to wait till things settled down a little bit.
Mm,
Um, and I got into a unit or a craftsman, and I refinanced about a year later to get out of the mortgage insurance. When you put less than 20% down, as you know, you're on the hook for that mortgage insurance.
mm.
And then I eventually, a few years later, used all the equity to buy additional properties throughout Sacramento and other parts of the Bay Area, and
Wow.
kind of scaled just with the Burr method.
Mm.
Had a lot of like friends who would come, and we would just renovate, and we'd all work on each other's houses. And that worked out pretty well for me. And then I started getting into, operating as a, part-time accidental landlord.
Okay.
And I was doing things like kind of from an idealistic standpoint, right? I wanted to create affordable housing options for people in my community. And so, I was kind of doing things um, in that sense.
Mm.
And of course that backfired because, you're never supposed to rent to friends and family,
Right,
right?
right, right, right.
So I decided, I need to put on my investor hat and get a little bit more, take a little bit more ownership of kind of how I wanted to do real estate, and instead of being a hobby, taking it from a hobby to an actual kind of
Mm.
profession. But
Yeah.
I in my W-2 career, my craft, I started advancing within, um, being promoted to lead foreman, then to superintendent, and then I was asked to develop our quality management program.
Mm.
And then now I oversee the quality management program for our entire division.
All right.
So I yeah, so I relocated to Los Angeles. My partner's in medicine and started her residency here. And so we relocated. My company transferred me, and I'm the company I work for. We do about $6 billion worth of work. We put about six
Okay.
billion dollars work in place
All
nationwide.
right.
So
Wow.
pretty well resourced company.
Yeah.
So meanwhile, on the side, I'm still taking my investment journey very seriously. I got into sub two in 2022.
Okay.
And so I started to kind of dip my toe into acquiring single family through sub two. And it was easy. It was exactly as it was described, but in my heart, that really wasn't my passion.
Mm. Okay.
And my own investment, kind of my risk management rules, I was breaking them. I realized I wasn't
Mm.
really abiding by my risk management profile for, in terms of wanting to have decent equity in all the properties I was acquiring. So
Right.
then I kind of also realized, I was kind of compartmentalizing my real estate journey with my construction background, and I wanted to, transfer those skills a little bit more
Mm.
in a more defined way. So I decided, you know what? I think what was holding me back was by the time we got projects, they were already, through pre-development entitlement. They had approved, construction permit sets, and we were just going and we were fulfilling um, on the build. But I wanted to learn everything in the pre-con stage and pre-development stage so that I could really take advantage of infill lots and just kind of other, obviously, economically, I'm in California, and just like everywhere else, there's like a huge demand for housing, affordable housing, but the political climate here is really favorable to development.
Right.
So I decided to, really focus in on building relationships with smaller developers here, that I could bring my value just in my experience from managing project management, construction, all of that knowledge. But then the trade-off would be I would learn, the other parts of the business, acquisition of land, entitlements, building out a design team, going through, all the due diligence. So that's what I did. I started partnering with smaller developers here who kind of were investment, like we had very similar investment kind of goals. And so what was nice is I started doing acquisitions through all the methods we've learned in sub 2, right?
Yep.
Particularly, I was kind of leaning towards door knocking in my backyard, just distressed homeowners because of pre-foreclosure. I live in West LA, and I don't, and a lot of people shy away from California because they think, it's not a very landlord friendly state. All good. But for me, there is obviously lots of competition, but in door knocking is a lot easier. You just, stop by, check on your neighbors a few times a week. And so I've been working those leads. One of them I'm closing on this week, deploying my strategy around infill lots, like really kind of stacking distressed homeowners, pre-foreclosure, live in R2, R3 zoned lots, where they have, old single family or duplexes that are run down, right? So they're not able to get them up on the market right away. And they're just kind of wanting to work with somebody who's going to help them get to their next place. So that's kind of been my strategy. It's been working out so pretty well. And after we close on Monday on this property around the corner from where I am, we're going to tear it down and the fourplex.
Oh, nice.
It's a 2. Yeah, it's a so it's a 2.2 equity multiplier, 60% IRR. The returns are outrageous.
Oh, very good. Wow.
Yeah, so our capital stack on that one, it's a all in. It's about 1.85 for the debt side, the construction loan, and 750K in private equity that we're raising. So just under $2.6 million between acquisition, hard costs, soft costs, everything to complete the project. Our exit is going to be to put it on the market right now. Today, sales comps, when we put our pitch deck together originally, it was going to exit at $3.5 million. So that leaves, about $900,000 in net profit, 50% to the GP, 50% to the LP.
Cool.
Yes. So the nice thing too is about 9 days ago, one block away, a very similar type build went into escrow for $4.5 million.
Okay.
So we're really, really happy with that. I think our returns are going to be much nicer in like the 22, 24 months where we project to put it up on the market after it's stabilized.
Congratulations.
So that's been
worked out. Yeah.
It's going great. I have another meeting at about 10:30 for another neighbor, similar corner lot, huge, perfect zoning, similar situation, and then through sub 2, I was at community camp last week, and a sub 2 member has a couple aunts that are older, and they have property in Beverly Hills, which is again my neighborhood, and my friend in sub 2 was like, please talk to them because otherwise they're going to take a reverse mortgage and probably do better. He already had one aunt who fell for it and completely signed over her house to this guy who and just got really shortchanged. So I mean, I think this strategy has been great. It's been a combination of helping people using creative methods. So like, for example, the one I'm closing on this week, the seller, her story was She had a lot of grief. She lost her husband, her mother, and her uncle all within a very short amount of time.
Oh,
Her, her and her husband had actually planned to build an ADU in their backyard.
oh,
So they took out a loan through the VA. He was eligible as a veteran. He passed away on Monday.
oh, wow.
Their loan funded on Tuesday.
Oh,
She didn't know what to do. She didn't realize that she was still entitled to that loan. Her head was just not in the right place. She asked what she should do to a friend, a quote friend who was a realtor. He said she's got to give the loan back. And I don't know about VA loans, but they're really, really great loans in the sense that you have zero down,
right.
and they tend to get better interest rates than what's out there on the market. So she ended up giving this loan back, and her friend hooked her up with a hard money lender instead.
Oh, wow.
The hard money lender convinced her to take out more than she had originally taken out, 10% interest only. Obviously, she used some of the money for funeral expenses and to catch up on stuff. And I think she was just going through a weird place, right? She then hired a contractor and he took off with her money. Or at least, yeah, at least that's what she told me, right? So fast forward, she's in a pickle. I help her out and she agrees to sell. First, we were trying to figure out how she could say, then she agrees to sell to me. So we structured two offers. One was sub 2 and one was a hybrid and one finance. I backed out of the hybrid offer, which was subject to and seller carryback, because since we were going to tear it down, I wasn't really sure what was going to go on. And with like multiple lien positions for going out for a construction loan, I was like, you know what, we got to pivot. But I was able to give her a deal where from her equity, we're going to give her, well, she's going to get 3 extra months in the place. We're going to give her 50,000 of her equity after she leaves. And that's enough to cover 1 year's rent. We've found her another apartment to move into. That'll cover 1 year's rent, plus expenses for moving and things like that. We're going to help her move. And then the remaining equity, we're going to give her 10% on her money paid out every month for 2 years. So she's actually helping finance some of the construction, which she likes because I think she had like an investor mind. She just didn't know how to execute. So I said, look, this is an opportunity for you to learn. You'll learn how to build, and then we'll continue. Maybe we'll find you something else. In 2 years, we balloon her out, get her, in the meantime, repair her credit. We were able to kind of line up with some different mortgage brokers within sub 2 who do VAs, like how to get her back on track in a few years to qualify again. So we kind of have worked with her on a plan to get her back on her feet in a couple of years, and then she'll have all that equity that we're basically holding for her, because I was kind of a little bit nervous that she would blow it, to be honest. And then she'll be able to use that to leverage to actually get back into home ownership again.
Right.
So it's kind of the perfect balance of like, okay, why did I get into sub 2? Why did I get into this kind of like service driven way of doing investing and solving problems? And then also like getting into kind of, okay, now we're creating more housing in Los Angeles, and it's extremely lucrative because it's just a really good location where I happen to be doing all this this investing. So that's a little bit about where I'm at right now. The goal is to eventually, I'm also an owners club, which is kind of like a lot of us in owners club have been asked to kind of create our quote Mount Everest, which is kind of how you want to move the needle in real estate. And so for me, I want to create 1,000 units of affordable senior housing, because through like my experience with helping people in foreclosure, most of the people who want to stay and I can help them stay in their house, they simply end up not being able to stay because they can't age in place. And so a lot of what I want to do in the next 3 to 5 years, as I build my own experience under my own name within this kind of low like low rise, mid rise development
Hmm.
in LA. I want to be able to leverage that so that in 3-5 years, I can then have enough experience to go out for a kind of a planned community, a 55 plus kind of community that's more horizontal design,
Hmm.
ADA, full
Right.
amenities, really like kind of,
Hmm.
but coupling it with modular construction to bring the cost down and pass that on to the end user,
Hmm.
and kind of develop an HOA structure so that HOAs are kind of pegged to what typical social security draws would be. So the person would have to come in with assets. They would have to be liquid and have some sort of capital to buy their unit, their
Hmm.
share. But then after that, I want to keep it so that the expenses are low. And, it's kind of a space where as people age and their loved ones pass away, but they build community with each other, they kind of age together
Yeah.
and move
That's
on
good.
to skilled nursing facilities and things like
Mm.
that. So
You've got
that's
a
kind of
beautiful
my
vision. That's
big vision.
Yeah,
Yeah.
that's a wonderful vision and a good story, and that story will carry you through as well. The way you helped that lady, and people take advantage, and you helped her. That's wonderful, and what a wonderful vision as well. And well, yeah. So thank you for sharing all that. And now I know who you are, and that's what it's all about, isn't it? We can learn who's who in the community. Um, I'm in the large multifamily space now, so maybe there's some things that we come across. You already, from what you said and shared, understand how that works. So if an opportunity comes along, I'd be more than delighted to send you along an invite if you wanted to be on the LP side,
Yeah.
It'll make
Absolutely.
yeah, yeah. The passive
Yeah.
role that doesn't interrupt what you're doing or anything like that, but makes your money continually work hard for you. We look at good rates of return. We look for C class in a B class location, and we look at the value add and reducing expenses. And we play our sandboxes anywhere from 10 million up to 100 million, 100 units or more. So we get all the professional management in, do the asset management at the highest level with very experienced operators. So yeah, I can certainly send that along to you. I
Please.
redeveloped my YouTube channel. The light of that, I was, encourage you to subscribe to it. That way I can remember you, because I mean, I network with 4 or 5 people a day. And so you can imagine keeping up with everybody's not easy. But if
Yeah.
they're on my channel, I recognize them. So
Let me see if I've subscribed. I think I liked your video earlier, but let me see if I subscribed.
yeah.
I think it'll take me there in a minute. I'll definitely subscribe when we get off this call.
Thank you. I appreciate that, because I know with your experience and help, we can certainly help each other with this. I like what you're doing with the senior community. I think that's very smart with the baby boomer age. That's really it's only going to grow. Well, I think it was another 10 years. I mean, I'm a baby boomer myself, so I'm one of the younger ones. So
Yeah.
so I'm not quite into that community yet, but I will. Maybe in 10 years I will be. I'm
Okay.
63, so
Yeah, we're all gonna be there at some point,
yeah,
so
yeah,
it only makes sense. You're in Knoxville, correct? Or
that's right. I'm in Knoxville. Yeah, yeah.
so I did the Prop AI challenge with some other folks in Owners Club,
Okay.
and we selected Knoxville. Actually, we selected a couple places in Tennessee.
Hmm.
And I have a gentleman I'm talking to. He has about 40 properties
Okay.
that he's liquidating.
Hmm.
Um, so we've been kind of back and forth. He doesn't really like being on the phone. It's kind of awkward for him. Uh,
Okay.
he's in his late 80s. So, but a couple of the properties are very nice. Commercial lots, agricultural lots, anywhere from 1 acre to 82 acres.
Oh,
So
wow. Okay. Well, I'm looking
yeah,
for, I do have a buyer for acreage. It's builder developer. So anything in this area definitely maybe can be boots on the ground for you or even help find a buyer. Definitely.
yeah, that would be fantastic. The 82 acre lot, for example, it's actually 8 lots.
Okay.
And it's in off of Rittledge Pike.
Oh,
Um, yeah, Hudson Estates.
okay. Well, some
Yeah,
of those details definitely. As I say, this builder might be interested.
yeah. So
Principally interested in Hardin Valley, but we must say it might be tempted, you know, it's moving his equipment and everything. He doesn't like moving it very far. It's quite weird, but I don't know why. I mean,
yeah, yeah, it would be great to maybe I'll follow up with you and you can look at it. I still need to talk with him. It's a slow process. He's
yeah,
hard of hearing. He's
yeah,
some good days, some bad days,
yeah,
but
I understand.
but he said he had it platted for subdividing it. I've got to call into Knox County to show that because it doesn't show that on the GIS.
Okay.
But he said it can be subdivided to 62 1 acre lots.
Oh, my
Yeah.
my builder might well be interested. Yeah, money isn't there. Obviously, he'll pay a fair price, but you know, he's got the deep pockets. He's been a developer for many decades. So I'm gonna say centuries, but many decades, shall we say? You know. So yeah, he'd be interested.
Okay, wonderful. That sounds great. So yeah, let's stay in touch and I'll either book another call through your Calendly or
Yes, yes, do that. Yeah, yeah, let's do that. Especially if we're talking specifically, that would be very good. Yeah, we can nail it. You know.
okay.
Hmm.
Cool. Is there so yeah, please send me all the things that you end up raising for in the future.
Hmm.
Um, I actually, if you guys are doing anything in Memphis,
Okay.
I have a couple of buddies who are extremely excited about that market and have money to deploy.
Yeah.
Some of them have funds,
All right.
some of them are just PML.
Right. Okay. Very good.
Yeah, so please let me know.
I will. Thank you, Io. Is that how you pronounce your name? Io?
Yep, yeah, it's like the moon of Jupiter.
Yeah, that's a fiery moon,
It is.
that.
It's a very gaseous moon.
Yes, it is. Very full of volcanoes. It's active, that's the important thing.
My mom named me and my siblings 2-syllable I names. So Io, Iris, and Isis.
Hang on. There we go. That was a scam call. Sorry, your mother named you, you said?
Two-syllable I names.
Okay.
So Io, I have 2 siblings, Iris and Isis.
Oh, nice. Okay, very nice. That's all
Yeah,
theme. I like that when they do themes in families. It's good.
yeah, yeah.
That's wonderful. Well, thank you, Io, for your time with me. I've got a lot of admiration for you. You're one serious cookie when it comes to
Yeah.
real estate. I can tell that, you know. So that's wonderful. And you have a wonderful day. And yeah, let's stay in touch. Okay.
Okay, you two have a good day.
You too.
I'll
Bye.